Picture this. You've just received your brand new credit card, shimmering and gleaming with potential. But wait. Before you start swiping away, did you know that credit card debt is one of the fastest ways to find yourself in a financial sinkhole? And when billionaire entrepreneur Mark Cuban speaks about managing finances, it's wise to sit up and listen. Today, we're about to share Mark Cuban's invaluable insights on avoiding the credit card trap. Whether you're a college student or someone looking to revamp their financial strategy, this is the video you can't afford to miss. But wait, if you want more content like this, please hit the subscribe button and press the notification bell. Let's start the video. Credit card basics. A credit card is a plastic or digital card issued by financial institutions, granting cardholders the ability to borrow funds up to a specific limit. Unlike debit cards, which draw money directly from a bank account, credit cards allow users to purchase now and pay later, typically on a monthly basis. The benefits of using credit cards are numerous. They offer convenience, enable online purchases, provide rewards or cashback, and can be a safety net in emergencies. Moreover, responsible use can bolster one's credit history, making it easier to secure loans or mortgages in the future. However, they come with risks. Falling into the habit of only paying the minimum amount due can accrue significant interest, leading to mounting debt. Moreover, mishandling or losing your card can expose you to potential fraud. It's crucial to understand these nuances to use credit cards beneficially and avoid potential pitfalls. Mark Cuban's views. Mark Cuban frequently emphasizes the importance of financial prudence, especially when it comes to credit cards. He warns about the dangers of making just the minimum payments. While it might seem manageable in the short term, it can trap users in a cycle of debt. For instance, on a $2,000 balance with an 18% interest rate, making only the minimum payment could mean taking years to pay off and paying nearly double the original amount in interest alone. Cuban also cautions against seeing credit cards as free money. Just because there's an available credit limit doesn't mean it's extra cash to spend. He often cites the allure of credit cards with enticing offers and rewards as a deceptive ploy. An example: being enticed to spend $500 to get a $50 cash back might seem like a deal. But if not paid in full, interest charges could far exceed the reward. The credit card trap. The credit card trap often starts innocently. An unexpected expense, a desire to enjoy rewards, or even just the convenience of buy now, pay later. Over time, as balances grow and only minimum payments are made, the debt snowballs. For instance, let's say Jane uses her card for a $1,000 emergency car repair, thinking she'll pay it off quickly. However, life gets in the way, and she ends up making just the minimum payments. The real cost kicks in with high interest rates. If Jane's card has a 20% interest rate and she's only making the minimum payment, that initial $1,000 could balloon significantly over time. In a few years, she could end up paying hundreds in interest alone, making her emergency repair far more expensive than initially thought. This cycle can become even more daunting when multiple cards are involved, leading to a web of debt that's difficult to escape. Strategies to avoid falling into the trap. Limiting number of cards. Having multiple credit cards might seem like a way to increase purchasing power, but it can also complicate tracking expenses. For example, Tom, who has 5 different credit cards, might find it hard to keep track of due dates, leading to missed payments or overspending. By limiting himself to 1 or 2 major cards, he can better monitor his expenditures and manage his financial health. Paying full balances. Each month. This is the golden rule. By ensuring the full balance is cleared monthly, users can enjoy the benefits of credit cards without the added costs of interest. If Jenny spends $300 on her card and pays it off in full by the due date, she avoids any interest charges, essentially using the credit card as an interest-free short-term loan. Being wary of promotional rates. Promotional or introductory rates can be enticing. For instance, a card might offer 0% interest for the first 12 months. However, post this period, the rates could skyrocket. So, if Sarah transfers a balance to this card and fails to clear it within the promotional period, she could suddenly find herself paying exorbitant interest on the remaining amount. It's essential to read the fine print and have a clear repayment plan. Alternatives to credit cards. Debit cards. Unlike credit cards, debit cards draw money directly from your bank account, ensuring you spend only what you have. For instance, If Anna wants to avoid debt, she can use her debit card for purchases, ensuring she never spends beyond her means. Cash. The age-old method of physical money helps control spending. When John sets aside $50 in cash for entertainment each week, he can visually see his spending and can't go beyond that budget. Mobile wallets and digital payments. Platforms like PayPal, Apple Pay, and Google Wallet allow users to link their bank accounts or debit cards, facilitating easy transactions without resorting to credit. Secured credit cards. These require a cash deposit that serves as a credit limit. It's an option for those wanting to build or repair credit. Cuban's personal experiences and lessons. Mark Cuban, today known as a billionaire and business magnate, didn't start with a silver spoon. His financial wisdom has been shaped by real-life experiences, hard work, and at times, mistakes. One of Cuban's notable early ventures was the formation of a tech company, Micro Solutions. Starting the business wasn't a walk in the park. Cuban had to live frugally, even sharing a small apartment with several others and sleeping on the floor. This period taught him the value of perseverance and budgeting. But perhaps one of the most significant lessons Cuban often shares is his experience with credit cards. In his younger days, Cuban had racked up significant credit card debt. He often reflects on the stress and strain it brought to his life, even recounting times when he had several maxed-out cards and juggled between them. It was a hard lesson on the pitfalls of credit and the importance of living within one's means. Cuban also had his fair share of entrepreneurial failures. One such instance is when he tried his hand at the powdered milk business, believing it was cheaper than regular milk, and hence would be a hit. It wasn't. The venture tanked, but it gave Cuban a critical lesson in market research and understanding consumer preferences. These experiences, both good and bad, shaped Cuban's financial philosophy. Today, he firmly believes in avoiding bad debt, living within one's means, and continuously educating oneself. His life stands as a testament to the fact that with grit, knowledge, and the right financial decisions, anyone can turn their fortunes around. That wraps up our insightful journey into Mark Cuban's perspectives on managing debt and navigating the world of credit cards. If this information resonated with you or proved helpful, please give us a thumbs up. Don't forget to hit that subscribe button for more valuable content like this. Knowledge is most impactful when shared, so if you think someone could benefit from this video, please pass it along. Let's empower each other to make informed financial decisions. Thank you for watching, and until next time, stay smart and stay financially savvy.